Yes, people, very happy with all of you. So, guys, we're doing this chapter called as cash flow statement. In the last class, we had a discussion on illustration number 2 and illustration number 6 of the ICAI study module. So now we'll be heading forward to next question, illustration number 7. It says that the balance sheet of Sun Limited as at 31st March 2001 and 2000 is given. So this is current year and this is previous year. Let me change the color. This is current year, this is previous year. Okay. I'm not reading the balance sheet because it does not give me any information as such. So I'm interested into notes to accounts. Even before that, I'm interested into additional information. So guys, the notes to accounts ends with cash and cash equivalent. Below that, if you see, they've given profit and loss statement for the year ended 31st March 2001 disclosed. Means this talks about profit before tax, tax expenses, profit for the year, declaration of dividend, retained profit. Okay. So this is not a complete P&L, people. What they have done, that revenue part, total income, expenses, that they have not given. From the total income, if I minus total expense, what will I get? Profit before tax, that they have given. This is what we need, no? Starting point. Profit before tax is an extraordinary item. From that, they've subtracted the current year provision for tax. You'll get profit after tax. From that, they have done the appropriation for the dividend. Of which year? Previous year. So I'm getting current year surplus. So this is basically, can I say, kind of appropriation information they have given? Okay. See, what information they have given, identification of that information is very important. Once you know what is given, it becomes easy. Now, why this is a little bit tricky? Because you are used to see a complete statement of P&L. Now, from nowhere, they have taken the last half of it and given to you. So all of a sudden, you see such a structure, like you see a body with no head, no top, only bottom. Anybody will get scared, no? So, so at first instance, you might feel at first instance, you might feel like that. So this is a basic information, nothing to worry about. Sumanyu, control. Now, further information is available. Fixtures and vehicle is given. What is fixtures and vehicle? Looks like more of an asset. So if you see property, plant, equipment, we are building fixtures, vehicles. Okay, they've given information about fixtures and vehicles. What information they have given? Let's have a look at it. They told depreciation for the year is so and so. Oh. Depreciation for the year is given. Disposals. Proceeds on sale of vehicle. Proceeds on disposal of vehicle. Means vehicle has been sold. And how much money did you fetch? 1,700. So this 1,700 is profit or what it is? So it is sale value. This is sale proceeds. This is sale value. Okay. Return on value is how much? 1,000. So this is, can I say, remaining cost? So 1,700 is sale value. Remaining cost is 1,000. If I minus it, what is the remaining 700? That is profit. Oh, super. So looks like vehicle has been sold. Until previous question, the information about sales is given in a statement format. A vehicle whose return on value is 1,000 rupees has been sold for 1,700. So you used to calculate. Here they've given the data to you. Wonderful. Prepare a cash flow statement for the year ended 31st March 2001. Guys, please tell me, if I look at this information, can I say there is some adjustment with regard to fixtures and vehicles? Fixtures only depreciation. So I'm going to fixtures and I'm putting only 1 star mark. Do you agree with me? But when I come to vehicle, there is 2 information. 1 information on depreciation. 2nd information with regard to sale of vehicles. So how many star marks should I put, people? 2 star mark. Okay. Now profit before tax I have. Profit before tax I have. I can take this as a starting point. We have to see what to do with this information. We cannot decide anything as of now, but we have to wait and watch. All this I would have considered when had they only given retained earning surplus, then all of these I would have reversed to get the profit before tax. But profit before tax is already given. So I need to check what am I supposed to do with this. So this will be definitely of some use, but where exactly we don't know as of now. When the right time comes, we'll decide. Wonderful. So now I'm going to notes to accounts. So what did I do first? First, I went through the additional information to understand what is given there. Then I'm coming to notes to accounts to see what further information I can get from there. Now, please tell me, people, depreciation information is given. Depreciation for the year. This will affect where in your cash flow statement? Sir, in segment 2, I need to add back. Wonderful. Proceeds on disposal of sale 1,700. What am I supposed to do? So this is cash inflow of the investing activity. Okay. Return on value, anything I should do? No. Profit on disposal. Segment 2, I need to minus because profit is already included in the profit before tax. It is okay to be added, but the place is wrong. It should be added where? In the investing activity. But currently it is added where? In the operating activity. So I'll minus it from there and add it in the investing activity under this category. So in this 1700, already 700 is put together. We are adding together. Okay, okay. So I got three relevant information from this tabular column for my cash flow statement. Agreed? Now, from this information, what is relevant for my cash flow statement? We are yet to watch. Current year tax might be helpful where they are asking us to prepare the provision for tax account. There they'll give you the opening provision, closing provision, current year provision. So using these three information, I'll find out tax paid. So that time it might be helpful. I don't know, but I'm telling you, this is the information possibly to be used there. Dividend declared during the year. Dividend declared during the year. When should it be paid? Next year. This 2000 dividend is what? When does this entry come here? 2000, if amount is deducted, when is this entry passed? In the current year. In the current year. When is the dividend declared? In the current year. That is dividend of previous year declared in current year only. And current only we have passed the entry. So within 30 days, you have to make the payment. So in the dividend payable account, this could be useful. In the provision for tax account, this could be useful. So these two items I foresee to be used in these two ledgers. Whether the actual usage will come or not, we have to wait and watch. Then I'm going back. Cash and bank will be a part of your cash and cash equivalent. Building furniture vehicle, I have to open the ledger and see. In that case, I'll get to know. You have to open the ledger and see what we have to do. Dividend payable is given. Oh my God. So dividend payable is given. So I have to open the dividend payable ledger. Exactly, it is like provision for tax ledger. Dividend payable ledger we have to open. Okay. Profit and loss account. Guys, what is the opening balance? This is previous year opening balance, current year closing balance. 4,000 is the profit in the beginning of the year. By the time you came to the end of the year, it became 5,000. How? So current year 1,000 profit added. And it is exactly matching. It is exactly matching with the retained profit here. Correct? This 1,000 profit only is got added to your opening profit. No, please think, people. Retained profit 1 lakh you got. Sorry, 1,000 you got. This 1,000, what will you do? Sir, I'll go to my reserves and surplus. I'll open one account called as P&L account. In that, opening balance is how much? 4,000. Add current year retained profit how much? 1,000. Closing balance how much? 5,000. So this is this 5,000 closing balance. This is this 4,000 opening balance. Difference is what? Exactly current year's profit. Any problem? Online people, any problem?
Oh, sir.
Now imagine, had they not given this information, then what will I do? I will take this profit and loss difference 1,000 rupees in where? Segment 1, net profit before tax and extraordinary item. Under that, I take surplus. With that, what will I do? I will all add back declared dividend, add current year tax to get what this. But now I will not do the drama. Why? Because the information what I want is readily available here. Profit before tax is readily available. So I will not do the calculation of net profit before tax and extraordinary item. Why? Because I already have the information in the tabular column. Okay. Now, equity share capital from 50,000 became 60,000. Looks like proceeds for issue of share capital. Proceeds for issue of share capital. So it is cash inflow of financing activities. Any problem so far? No problem. Let's go back. Cash and cash equivalent done. Trade receivable is my segment 3. Add or minus, we'll decide there. But this is a part of segment 3. Inventory is part of segment 3. Current investment. Cash and cash equivalent or investment activity? Investment activity. Unless and until they say that these current investments are satisfying those 3 conditions. What are those 3 conditions? It should be highly liquid. Maturity up to 3 months. And there should be no or low risk in change of the value. If these 3 conditions satisfied, is cash equivalent. Any information like that they've given? No. So we'll take this current investment as investment activity only, where we're believing that this value could significantly change. Like that, we'll assume and take this as investing activity. So this is my investing activity. Now what is happening? From 1,000 became 2,000. So investment increased. To increase investment, I have to pay money. No? Cash outflow has to happen. So this is cash outflow of the investing activity. Property, plant, equipment, I'll not see because I have a note number against it. What did I tell you? In balance sheet, whichever item has got note number, that difference, where will you go and see? In the notes account. Wherever the note number is not there, the difference will take in the balance sheet level. So wherever note number is there, the difference will happen in the note level. Wherever the note number is not there, the difference will happen at the balance sheet level. Okay. short-term provision for tax. Can I put one star mark here? Why? Because the provision for tax of current year is given in my tabular column below. Here they're given the provision for tax. So rightly guessed. So this is going to affect your provision for tax ledger. This is going to affect your provision for tax ledger. Okay. Other current liability, there's a note number. Leave it. Trade payable, note number. So this will affect my segment 3. Reserves and surplus, share capital taken care of. Any problem so far? No problem. So can we start preparing? Heading in the books of Sun Limited. Or just write Sun Limited. Heading please. Cash flow statement for the year ended 31st March 2001. Particulars, rupees inner column, rupees outer column. Please tell me under that what is the main activity? First one. Cash flow from operating activity. Under that, net profit before tax. Guys, in some question of ICAI, they would have used the word net profit before tax. In some question, net profit before tax and extraordinary item. Both are correct. Both are allowed by ICAI. So net profit before tax and extraordinary item is how much? So directly given, sir. 4,500. Directly given here. Okay. Now add
non-cash and non-operating expenses.
Non-cash and non-operating expenses. Any non-cash and non-operating expenses? Let's come from the beginning. In the balance sheet, can you see any segment 2 items? No. In notes to accounts, any segment 2 items? No. Directly go to your fixtures and vehicles. So depreciation I'll add it. Immediately after depreciation, I'll prepare the ledger for fixtures and vehicles to see if there is anything else coming in it. Depreciation. How much? 1,000 plus 2,500. 1,000 plus 2,500. How much it is? 3,500 in the inner column. Okay. Working note 1. Which ledger should we open? Fixtures ledger. Please tell me what is the opening balance of fixtures, people? Opening balance of fixtures 11,000. So to balance brought down 11,000. What is the balance carried down? 17,000. So by balance carried down 17,000. What other relevant information of fixtures is available? So depreciation. What is entry for depreciation? Depreciation account debit to fixtures. So in fixture account by depreciation. How much? 1,000. Is the ledger automatically balancing? No. Where is the shortfall? Debit side. How much is the shortfall? 7,000 is the shortfall. So what that could be? To bank. Nothing but purchase of fixtures. So this is nothing but cash outflow of the investing activity. Cash outflow of the investing activity. That's all. Next working note is for vehicles. Working note number 2. Guys, can you see the speed that we had earlier compared to that we are doing better? So with this, what do you understand? More questions you work, the more questions you work out, that much time you can improve by each and every questions you work out more and more. Vehicles. To balance brought down. How much is the opening balance, people? Vehicles. 8,000 rupees. What is the closing balance, people? By balance carried on 12,500. By depreciation, how much, people? 2,500. 2,500. Now, the question says that 1,000 worth of vehicle is being sold for 1,700. This 1,000 worth of vehicle is included where in the ledger? Sir, in this 8,000, that 1,000 is included. This 8,000 is WT of multiple asset. In that one asset is being sold. Have they given the date of sale of the asset? No. In the absence of the information, we assume that the asset is sold in the beginning of the year. So in this 8,000, that 1,000 worth of asset is included. Monkey 1 depreciation will not come. Monkey 2 is what? Profit and loss. So now in your book, the value of the asset is 1,000. But the opposite person who's going to pay you the money is paying 1,700. So to increase the value of the asset by 700. So that is nothing but debit side to profit. To profit on sale of vehicle. How much? 700. So now 1,000 rupees and 700 both put together. Now what is the value of the asset in your book now? It is worth 1,700. The 1,700 worth of asset is going out and 1,700 worth of money is coming in. So what is entry? Bank to? Yes. So by bank how much? 1,700. So 1,700 in debit and 1,700 in the credit. If I net, it becomes zero. The value of the asset is become zero because the asset is no longer in the business. It has to be zero. Any problem? Now the ledger is automatically balancing or not balancing? Not balancing. Wonderful. So what is the reason? Sir, to bank balancing figure 8,000 rupees. So this is the final finding. This is not affecting my cash flow statement. This will affect my segment 2. I need to minus. This is cash outflow of investing activity. This is segment 2 already taken care of. By bank, cash inflow, investing activity. That's all. This will not affect my cash flow statement. Wonderful. So guys, with this two information, I got only depreciation information and profit. That's all, nothing apart. So now, less non-cash, leave two lines, and non-cash and non-operating income. Non-operating income. One is profit on sale of vehicle. How much? 700. Segment 2 taken care of. So I'm discarding this. I'm discarding this also. Anything else affecting my segment 2? Anything else affecting my segment 2? Nothing. So straight away write both of them in the outer column. So this is 3,500 add and this is 700 in the brackets. Be very careful in the brackets. 7,300. What is this called as? Operating profit before working capital changes. Now add increase in. Now wait, don't write current liability. Anywhere in the format of, forget format. If you see AS3, did they provide any format for your cash flow statement? They have only given the example. Based on that example, the experts have drafted their format and they have started following it. Last class, I think Subiksha asked or somebody asked, I don't remember. Sir, there's something called as dividend payable. There's something called as interest payable, interest outstanding ledger. Like that, there's certain liability ledger which are not recorded in your segment 3. It is going to your segment 2. So she had a doubt there. So I wanted to highlight one point there, but I couldn't highlight that because we had a short of time to explain there. If you personally ask me, when I say increase in current liability and current asset, I don't feel the word current liability and current asset is appropriate there. Because when we say current liability and current asset, it includes all current liability and all current assets. Technically, if I go with that word, cash is also a current asset. Cash is also a current asset. So if I use the word current liability and current asset, will it be right? And nowhere in the format of the AS3, if I show you the format of AS3, Nowhere have they used the word increase in the current asset, increase in the current liability. This is something that we have taken from T.S. Grewal book. Look at this indirect method of cash flow statement. What have they done? Increase in sundry debtors, decrease in inventory. This is the language that they've used. Have they used the word add, increase in current liability, decrease in current asset? So from where did we pick up that information from? Not me. Anybody for that matter has picked up the information where somewhere earlier people have followed that practice. As it is, we have started copy pasting it. Now we have to think for a second. We cannot blindly follow everything that people do. They are telling current asset and current liability. How on earth current asset and current liability appropriate here? In that case, I have to put all the current assets here, all the current liabilities here. Then why are we taking a few of them in segment 2 and cash and cash equivalent is going in cash and cash equivalent, or cash in hand or bank is going to your cash and cash equivalent despite being current asset? So the word current asset doesn't look appropriate. But on the other hand, if we add one word to it, operating current asset or operating current liability, now it makes sense. If you say, why have we not taken interest payable? So interest payable is what? Liability. But is it operating current liability? No, it is not operating current liability. Are you able to follow? So if I add the word operating, to some extent we feel better off compared to just writing current asset and current liability. So here if you see, all the current assets and current liabilities are adjusted in segment 3. All of them are belonging to what operation? You take sundry debtors belonging to operations. Inventory is a part of operation. Creditor is a part of operation. So all these are more likely to be a part of your operation. So if I just use the word current asset and current liability, will it look more sensible? No. But if you add the word operating current assets, operating current liability, now you feel comfortable. Achha, we're talking about not all the current assets. We are not talking about all the current liabilities. We're talking about the operating current assets. And we're talking about operating current liability. The current assets and the current liability generated at the operating level. That looks more appropriate. So if we take my personal suggestion, the word operating current asset and operating current liability makes more sense. There is no need for you to display this information anywhere here. But this information keep in the back end. So whenever you have a doubt that why this current asset is not taken, why this current liability is not taken, just imagine this is operating current asset. So anything which is non-operating will not come in segment 3. Okay, not okay. So back of the mind, keep in mind that increase in what? Current liability, not all current liability, operating current liability, operating current asset. So whenever I'm talking here, current liability and current asset, it is in the context of what? Operating, because we are now preparing cash flow from what activity? Operating activity. So here, what is relevant for me? Operating current asset and operating current liability is relevant. So when we say current asset and current liability here, we mean what? Operating only, not the other part. So increase in current liability and decrease in current asset. Can we first identify those items first? If I talk about here, segment 3, we have marked trade payable people. From 2,500 became 4,000. How much? Increase in current liability by 1,500. So add 1,500. Logic, you are clear, no? Or do you want me to explain one more time? Because every time if I explain the logic, it will be a waste of time. In that case, I can do one extra question and go. Other current liability. Other current liability. What is it there in the other current liability? Dividend payable. Dividend payable is other current liability. Is it a part of my operation? No, it is a non-operational activity. So will I consider in segment 3? No. Are you able to get a better picture now? Yes. Dividend payable. Dividend payable is related to what activity? Financing activity. So it comes where better? The adjustment of that goes to financing activity. So we'll open an account called as dividend payable. In that, whatever is dividend paid, where will you take? Financing activity. That time I'll explain one more time. Don't worry. Then coming down, current investment. Current investment. Current investment is also current asset. No? Will I put in segment 3 here? No, because this is belonging to investment activity. Here, what are we bothered about? Which current asset? Operating current asset. Now are you able to get a better picture? Yes. Inventory belonging to which activity? Operating activity. Can I take to segment 3? Yes. From 14,000 it became 17,000. Additional 3,000 worth of inventory of purchase. So it is cash outflow. So 3,000 we have to minus. Increase in current asset we have to minus. Then trade receivable from 6,000 to 8,000. So minus 2,000. So 2 minus item and 1 plus item. So increase in current liability, we have trade payable. Trade payable. How much is the amount? 1,500. What is the difference between the two items? What is the item that which and which minus amount? Amount
4,000 minus 2,500.
4,000 minus 2,500. We have to show this value here. Okay. So only one add item people. Next is less item. Less. Decrease in which current liability? Operating current liability. Operating current liability. And increase in operating current asset. Now in your format, what I've done is in that Excel sheet, what I gave, no, that format of the cash flow statement. In that I've added the word operating. So you'll not get any confusion in future. Now the first item is what? Inventories. How much difference, please? 14,000 minus 17 type 17. Sorry, okay, no problem. Minus how much? 3,000. Then next is trade receivables. 6,000 minus 8,000. So it is negative 2,000. Now tell me the difference amount, please. 3,800. This is called as operating profit. Cash generated from operations. Technically, this is nothing but people, your profit before tax. Because from this, what am I supposed to minus? Segment for tax paid and the extraordinary item. So this is operating level profit, but in cash. The profit which is there, the profit before tax which is there in the P&L, it was adulterated profit, both non-cash and cash item put together. But this profit now what you've got is operation profit, which is nothing but profit before tax. Cash profit before tax. In this now, segment 3 over, segment 5. What is segment 5? Segment 3 over, now segment 4, no? Sorry, I said 5. Okay, less tax paid for this working note number 3. Working note number 3. How many one you'll do that? நீ ஒன்லி சுத்திட்டு இருக்கணும். Provision for tax. Let's go to the notes. What is the opening balance of provision, people? 1,000. Two balance brought on 1,000, sir. By balance brought down 1,000. Two balance carried on how much? 1,500. Okay. If you come back to the table below, current year provision for tax is how much? 1,500. What is the entry for that? P&L to provision for tax. In P&L, sorry, in provision for tax by P&L. So by P&L, how much? 1,500. So this is previous year provision for tax. This is current year provision for tax. Like that, how much money total you have promised to pay to income tax department? 2,500 you promised. Out of that, 1,500 you're ready to pay. Then how much have you paid? 1,000 is paid. Means last year money is paid. So to bank. This is tax paid. $1,000 is tax paid. What is the balance? 2,800. I don't foresee any other extraordinary items. So now this is cash flow from operating activity. Done. What is next? Cash flow from investing activities. Let's go in the beginning of the balance sheet. Any investing activity here? No, 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 no. Yes, here. Purchase of investments. Purchase of investments. How much? 1,000. It's cash outflow. Be careful. You have to put in bracket. Inventory nothing, trade receivable nothing, cash and cash equivalent nothing. If I come down below, nothing, 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 nothing. Here, proceeds on disposal of, say, vehicle. Proceeds from sale of vehicle. Or proceeds from disposal of vehicle. Proceeds from disposal of vehicle. 1,700 cash inflow. So add. Anything else?
Purchase of fixtures and
Yes. Now we have to come back and see the working note. In the working note, do we have anything? Sir, vehicles. Yes, we have purchase of vehicles and we have purchase of fixtures. 7,000 and 8,000. Purchase of fixtures first. Give reference to working note number 1. How much? 7,000. Cash outflow, bracket. Purchase of vehicles. Working note number 2, which is 8,000 in brackets. That's all. Looks like money went out more only. How much?
14,300.
14,300 cash used in the investing activities. Cash used in investing activity, which is B. Next, C. Cash flow from financing activity. Don't write FA income, write full form. You have to write full form. Come from the beginning, people. Come from the beginning. Share capital, 10,000 increased. So proceeds from issue of share capital. If you look at the note, proceeds from issue of equity share capital. Proceeds from issue of equity shares. How much, people? 10,000 is cash inflow. Okay. Profit and loss account, leave it. Dividend payable. Please open the dividend payable account. Working note number 4. Dividend payable. Please open dividend payable ledger. So what is the balance brought down? By balance brought down. How much? 1,000. Dividend declared in the current year is 2,000. By P&L 2,000. Closing balance is how much? 2 balance carried down is 0. So how much is paid in the current year? Same like provision for tax. But we have to do understanding. I've not explained. I've done the ledger. I meant to explain what we've done. 2 bank, how much? 3,000. Our target is not to get the answer done. We have to understand what we are doing also. So this is dividend paid. If this is clear, can I go to the logic again?
Yes, sir.
How many of you thought sir will do this ledger and leave it, he'll not explain? Nobody thought like that. So what a confidence I've got. Now listen to me very carefully. Don't do anything, just observe. I'm opening 3 years. How many years? 3 years. Please tell me, people, current year, what is the financial year? 2000, 2001, huh? Hey, current year means not that. We are doing question, man. 2000, 2001. Okay. Previous year, 99, 2000. Were you all born by that time? No. Okay. You were somewhere. Where we also don't know. Previous to previous year? 98 to 99. I was there, but childhood memories. Now, listen to me very carefully. 98, 99. You have earned profits. You've done the business, you made the profits. Now, the director wants to give the profit. Can they give the profit here itself? No, there is a procedure. The procedure is that in the next financial year, somewhere in the month of April and May, the board of directors will propose. Correct? Once it is proposed, that dividend is not liability. That is a contingent liability. Why? Because we are waiting for approval of shareholders in the AGM. Okay, so we have time for AGM. After BOD meeting, what happens? Sir, tax filing happens. The auditor will give us report. He will sign the financial statement. He'll give us report. We'll file the returns also. So filing of the returns means what? The data of this year, the financial data of this year is freezed, sealed. We cannot go back and change. After this only what happens? After this AGM happens. After this AGM happens. In the AGM what happens? Shareholders approve the dividend. So in the year 99, 2000, the dividend of 98, 99 is approved. So dividend of 98, 99 is approved where? 99 and 2000. So once the dividend is approved, you're supposed to pass the journal entry. You're supposed to pass the journal entry. What is the journal entry? Dividend account debit to dividend payable. Then this dividend is transferred to P&L. So can I pass a combined entry instead of two entry? Two entry means what? Dividend to dividend payable, and this dividend is transferred to statement of P&L. P&L to P&L to dividend. Correct? This am I teaching for the first time fresh? Where did you discuss? 12th once, CA foundation once, then schedule 3 in the inter once. So third time I'm discussing. Schedule foundation we discussed. Yes, where we discussed? No? 12th and after 12th now? Okay. Why company course we didn't discuss?
No, sir.
Company course we didn't discuss. When I did the financial statement, schedule this thing, as per schedule 3, we had 12th class financial statement 3. I made you donkey fellow. I told you guys to attend the financial statement topic of 12 CPC. You didn't attend. In that I took no proposed dividend concept. These people attended in 12th. That was the foundation class for them, no? 2 times explain. Forget foundation. 12th one time explain. Inter one time explain. Forgot? Remember. Remember. Wonderful. Instead of dividend, can I put P&L? Okay. Please tell me which P&L is getting affected if I pass this entry. Sir, 99, 2000 ka P&L is affected. But this dividend is belong to which year? 98, 99. So whatever the profit is earned in 98, 99, that dividend is subtracted from the profit of 99 and 2000. Correct? And as per the rules, within 30 days of declaration of dividend in the AGM, you're supposed to make the payment. So this year's dividend proposed is how much here? 1000. Dividend declared is how much? 1000. Within 30 days, you're supposed to make the payment. You disperse a check. Opposite person did not claim it. What will I do for it? Like that, if I come to year end, so the entire dividend payable outstanding was how much? 1000. I pass this entry. I gave the check. I issued the check. Opposite person did not claim it. What will I do? So now how much is dividend payable in my bank account? Sorry, in my balance sheet. 1000. Of which financial year? In 99, 2000. If I see the balance sheet of 99, 2000, the balance sheet of 99, 2000, dividend payable 1000 should be reflecting. Because AGM was held, declaration of dividend was done. Within 30 days, I gave the check. But the opposite person did not claim it. So this 1000 is not yet paid. So this is outstanding in my end of the year balance sheet. So if you come back and see, this is that 1000 which is outstanding in the financial year 99 and 2000. Is the dividend originally declared 1000? No, the original dividend declared would be 99,000 or even 1 lakh. In that 1 lakh, 99,000 paid, 1,000 not paid. So what is the dividend declared? I'm not bothered. Out of whatever is declared and whatever is paid, in that how much is not paid? 1,000 is not paid is what I'm trying to tell you. So if I look at the closing balance of 99, 2000, closing balance of 99, 2000, 1,000 dividend is yet to be paid. 1,000 dividend is yet to be paid. Any problem in this? So far clear? Now, in the current year, sorry, in the previous year, 99, 2000, you would have done the business. You would have earned the profits. This profits, when can you distribute? Next year. What is the process? Same 3 steps. Propose the dividend here. File the income tax here. AGM here. In the AGM only I can record the entry. What entry can I record? P&L account debit to dividend payable. How much? 2000, 2000. So this 2000 is the actual profit of which year? This is the profit of 99, 2000. But this we are subtracting from which year's P&L? 2000, 2001. If you come to your question in 2000, 2001, this is current year P&L 2000, 2001. In current year's P&L, how much profit have you, sorry, how much dividend have you minused? 2000 rupees. So current year dividend declared is how much? 2000 rupees. Are you able to follow? So in my current year's P&L, what is affected? 2000 is affected. What is entry? P&L account debit to dividend payable. So in dividend payable account, what will be the posting? In dividend payable, what will be the posting? By P&L. That is what I did here. By P&L 2000 rupees. Any problem? So this is current year dividend. Current year dividend approved, but of the previous year. Yes. Correct. 98.99's profit. Technically, you distributed 99 2000. Had everything been paid, then there will be no closing balance in dividend payable account. Imagine the actual dividend was 1 lakh. In that 99,000 is paid. Balance 1000 is not yet paid. So that is with the outstanding balance of 99 2000.
So it closes balance to this year.
Correct. The closing balance of the previous year becomes the opening balance of next year. No? That is how in the current year this came as an opening balance. So this is nothing but unpaid dividend of last year. This is unpaid dividend of current year. Like the total dividend, how much I have to pay? How much I am supposed to pay in the end of the current year? 3000 rupees. Correct. Now this 2000 rupees what you are declaring, this also have to pay within 30 days, no boss. Correct. And in this question, can you see the balance in dividend payable ledger? No. Means what? That 2000 also paid. Previous 1000 also paid. Full 3000 paid in the current year. So actually from my bank account, current year how much money went out? 3000 rupees went out. 1000 of the previous year, 2000 of the current year. Any problem? So the way I prepared the ledger is same that of provision for tax. But I made you understand this logic because if you don't understand this logic, not now, when you do the questions at home by yourself, that time you'll have a same doubt. So this part is clear. And this type of question is getting repeated in 3-4 places. So one time I'm revising very slow here. Same concept I'll do one more time there also, but a little bit faster. So if this is understood, there when I do fast, you will understand. In this, if you have any problem, please ask me now itself. Everything is clear. In this, any doubts, please ask me. No doubts? Open your mouth and say no doubts. Online people, no doubts?
No doubt, sir.
Okay. Now, this by P&L affects by segment 1 in the calculation of net profit before tax and extraordinary item. Correct? No. Current dividend is added back where? In segment 1. But segment 1 is given like halwa to you. So I'm not bothered about this information. But this is what? Cash outflow of the financing activity. So now 3000 is dividend paid. So come back here. Dividend paid. Dividend paid. Of which year? Normally it should be of previous year. Normally it should be of previous year. But in this question also it is previous to previous year also. How much totally? 3000. Working note number 4. Bracket. Cash outflow it is. Put in bracket. Very important. Now any other any other financing activity? Nothing. Wonderful. Now please tell me what is the cash flow used in financing activity? 7000 is positive. So it is cash flow from financing activity. This is C. So what do I need, guys? Net. Now increase or decrease, we don't know. We have to see the total. Nishi, what is the total, please? Net. Increase or decrease? Minus 4500. That is 2800 minus 14300 plus 7000. How much it is? Negative it is coming 4500. So it is net decrease in cash and cash equivalent. With that, add opening balance. Add opening balance of cash and cash equivalent, which is how much? Where is it? 8500. So difference is how much? 4500, which is closing. Only 4000. Okay. Only 4000. Closing balance of cash and cash equivalent. That's all. Any difficulty in this? Not a tough question, but you can mark it as a medium one. For now, this question looks medium. As you practice more and more of this question become easy later. Now, have the habit of marking all the questions as easy, medium, and tough. In pencil, not in pen. Today, the question will look tough. Maybe tomorrow also it will be tough before the exam. Or it can be becoming medium also later. So today the question looks tough. Tomorrow with revision might become medium. So change it to medium 2 months later. Today, if you mark the question medium, tomorrow it might be medium itself or it might become easy. So 3 months down the line, 4 months down the line, all the questions should be finally decided whether it is tough, medium, or easy. Why this is important? Please tell me. Accounts is no doubt first exam. How many days will you take to prepare? 5 days. In that 5 days, are you trying to tell me the entire 27 accounting standard questions and all the big chapters, all the questions, each chapter 40 questions? Can you possibly is it possible to go through? Can you possibly go through? No. So you have to decide which question I should go through in that 5 days, which question I should practice in those 5 days, which question I should not even touch in those 5 days. That clarity should be there. In that 5 day, what I'm going to do, the clarity of that should be there from today. Today it is not going to come. Today means what? Over a period of this preparation journey. Let's say till December. From now till December, you should decide in those 5 days what I'm going to do, what I'm not going to do. So always have the habit of marking all the questions under 3 category. Tough category, medium category, easy category. Keep on reviewing those questions. Tough can later become medium. Medium can later become easy. Easy will remain easy only. Tough at times could remain tough itself till the end because the question is actually that tough. And medium might remain medium till the end. Any possibility can happen. So until October, you can keep on changing. Once you come to October, then that level of difficulty remains same what you've marked. Can we go to next question? Next question that I have planned is, I think it is a practical question. 7th done. 8th I'm not doing now. 9, 10, 13. And one question of scanner. So 4 more questions I have planned. 9th question of your book back question scanner. I mean, ICAI module. Practical questions basically. Can we do it? How will you disclose following items while preparing cash flow statement of Gagan Limited as per AS3 for the year ended 31st March 2002? So this is question of which financial year? 2001, 2002. Okay. 10% debenture. 10% debenture. So there is an opening balance as on 1/4/2001, 110. Closing balance 77,000. Okay. Okay. Debentures were redeemed. Debentures were redeemed at 5% premium at the end of the year. Premium was charged to P&L account of that year. What is this?
We need to reverse it from the P&L.
We need to reverse from P&L. Okay. Now, you should have a doubt here, no? Sir, we studied this concept called as redemption of debenture. Normally, debenture redeemed at premium. Normally, redemption of the debentures at premium is known to us during the issue. So generally, while issuing the debenture, while issuing the preference share, you know that you're going to redeem at higher price premium. So you record the loss in the year of issue. Here they're telling us to record the premium in the P&L of that year when I'm redeeming it. What is this? There is no rule, correctly said Balaji. There is no rule that you have to decide the redemption value at the time of issue itself. While issuing it, you issued at 100 rupees. And that time you said that you'll redeem at 100 itself. But later, as the company progressed, the company made a good progress in their business. As a reward, they wanted to redeem at premium. They want to redeem at premium. So let's me take a premium as 5%. How much it is? 105. So this decision of giving the debentures at premium or redeeming the debentures at premium was taken when? On the date of or in the year of redemption. What we studied in foundation was, in case you know, or while we studied in 12th standard, what we studied, in case if the redemption value is 105 at the time of issue itself, that time what to do, we've learned. Now we are learning that while issuing, we did not know this. While issuing this, we did not know it. Now while redeeming it, we decided we'll redeem at premium. So when you know that there is a loss, that year we'll record the loss numbers. Prudence concept says what? Record for your anticipated losses. At the time of issuing the debentures, I had no idea for redeeming the debentures at premium. So I did not satisfy the prudence principle. I did not record the loss at that time because I was having no intention to pay at 105. But today when I'm going to redeem it, today I decided I'll redeem at 105. So today only I got to know there's a loss. So when I should record the loss? In the current year, no boss. So now this premium or redemption of debenture is affecting my current year's P&L, current year's P&L. Had you known the redemption of debenture at premium at the time of issue itself, then this loss would have been affected that year's P&L, that year's P&L. Are you able to follow? In this question, I got to know about the loss now only. I'm recording the loss in current year. So this will affect my current year's P&L. Any problem in this? Clear with this point? Yes. Hmm.
Why can't we take the assumption that it is now also there? Because it's issued and issued at the same day. It's not balance, it's issued. Issued at the beginning of the year.
Correct. She's got a point. Now, what she's telling is that one more way of thinking. 10% debenture issued. When was this December issued? Sorry, when was this debenture issued? As on 1/4/2001, 110 was issued. Now, as on 30/20/22, the balance is how much? 77,000. During the year, the debentures were redeemed at 5% premium. So now another assumption what we can take is that, sir, this debenture was issued only in the current year. It was not issued earlier. Issued in the current year only. At the end of the current year, we decided that we redeem at premium in the current year, which means issue and redemption both are happening in same year. Issue and redemption both are happening in same year. This is also one possible assumption because the word what they have given is issued here. 100% possible. But before this, what expression I gave you, that also is possible because we have few questions based on that in the future where the issue is done earlier. At that time, the redemption at premium is not known. When the redemption at premium is known, now when the redemption is done. So either ways you take it, both are correct. In short, the premium on redemption is affected in which year? Current year. Premium for redemption is affected in current year. Now please tell me, what is the journal entry for redemption of debentures? One second. Nishi's interpretation was 10% debenture issued.
Outstanding. 10% debenture.
I can't take the word issued because then this becomes cash inflow. See, if the debenture is issued in the current year, this becomes cash inflow. So we have to see the answer whether they've taken that as cash inflow or not. Wait, let me check, cross check. There's no issue of debenture here in the solution, which means, Rishi, the assumption you cannot take what you say. Issued word is there. Issued word is there, but it is as on. As on means what?
Outstanding.
As on can never be. See, issued on is fine. As on means it is always in accounts. We assume that it is a balance that they have said. Your point is correct. Anybody for that matter who interprets this word for a second will get it out. That's why I want to cross check with the answer because for a second I got carried away with what she also said. But again, we have to understand the language of accounts, how they do it. How will you disclose the following items while preparing the cash flow statement for Google Limited as per AS3 as for the year 31st March 2002? 10% debenture issued means 10% debenture was issued. When issued, not given. This 110 is balance as on 1/4/2001. Issued on. On is different, as on is different. Balance is as on. Issued word, we never use the word issued as on. It's a grammatical formation of the sentence. Issued on so and so date. Balance as on will come. Will we use the word issued as on this date? Issued on this date. Balance as on this date. On this date, this was the balance. So grammatical formation of sentence changes. So we'll go with the same thing what I said earlier. So this debenture was issued somewhere earlier. But while issuing the debentures earlier, at that point, we did not know that the debenture is going to be redeemed at premium. So we recorded the issue at debenture at the normal rate. Today, when I'm redeeming it, I know that I'm going to redeem at premium. So when should I know? When do I get to know about my loss? Current year. When did I book my loss? In the current year. Please tell me, what is the journal entry for redemption of debenture? So debenture is liability, credit balance. To create liability, credit. To close liability, debit. So 10% debenture account debit. 10% debenture account debit. How much debenture is redeemed?
33,000.
Premium on redemption of debenture. Now this is not your liability. This is your loss to bank. Directly we can do. We are not doing any specific entries for the point of view debenture. So, to debenture holder will do, then debenture holder to bank. That is not required. Directly, we can combine the entry into it. Now, let me open the debenture account for all of you. 10% debenture account. What is the balance brought on people? 1 lakh 10,000. Closing balance how much? 77,000. How much debenture is redeemed? 33,000 is redeemed to bank. And this is redeemed at premium of 5%. So from the debenture, always see in debenture, we record the face value. So when we record face value, well, redeem also will redeem at face value. So from debenture, face value treatment only will be adjusted. 33,000 is the face value. Now on that, 5% premium is how much? 1650. That's all. And total how much money gone from bank? 34,650. Now 10% debenture, this is nothing but cash outflow of the finance activity. See, this part goes to bank. I will take this information from bank if I'm doing direct method. From the bank ledger and cash ledger, when I take the information, it is what method? Direct method. So this part you leave it. We in indirect method have the habit of taking all the information of the bank other than bank. We are taking bank related information only, but not from bank ledger, from all the other ledger apart from bank. So I should focus on the other two ledgers, no boss. So here, this is affecting my cash outflow of the financing activity. Do you agree with me? Now 1650 is what? 1650 is what?
Loss.
So this is a loss. This is a loss. Two part will come here. This is in segment 2, I need to add back. In segment 2, I need to add back. See, 1650 is definitely a cash outflow. It's a loss. How I'm making the extra payment? It's a cash outflow. Being a cash outflow item, I'm okay to be minus. But minus at where? In the financing activity. Now, where did you minus it earlier? So this 1650, you have to record in your finance cost. So it is got minus from your net profit before tax and extraordinary item. So minusing in the operating activity, is it right? No. So that we have to add back. So in segment 2, we'll add it back and minus again in the cash flow of the financing activity. Any problem here? Online people, any problem here? One more time, listen to this very carefully. Guys, in this question, they have told that opening balance of debenture 110, closing balance 77. So how much debenture is redeemed? 33,000 worth of debenture is redeemed. 33,000 worth of debenture is redeemed. See, when we record the debenture, we record the face value. When we record in debenture account, we record in face value. When we take this information out, we record again at face value. So coming in at face value, going out in face value. Okay, so pure 33,000 is what? Face value of the debenture redeemed. Are we redeeming at face value? No, I'm redeeming at premium. The issue price is at premium. So how much premium? 5% premium. Always premium is calculated on the face value. So on 33,000, 5% is how much? 33,000 into 5% is 1650. This is a loss for you. Debit all expense and losses. So 10% debenture account is being debited because I am cancelling the liability. I am cancelling the liability. Premium or redemption of debenture is not liability because I've paid the money now. So here premium for redemption is what? Loss item for me. It's a loss item for me. So this is loss, debit all expense and losses. And this loss is a record where in finance cost. It is recorded in finance cost, it is subtracted in finance cost, which means while calculating net profit before tax and extraordinary item, from that this finance cost is already subtracted. I'm okay this to be subtracted because this is cash outflow. But the place where it is subtracted is wrong. You subtracted where? Operating activity. Where actually we should subtract? Finance activity. So what am I supposed to do? Sir, add back in segment 2 and minus from the cash flow of finance activity. Any problem in this? Debenture outflow is cash outflow from the financing activity. So these 2 points are clear or not clear? Online people, first 2 points clear or not clear?
Yes, sir.
Now you can do a working note, people. Just copy paste this working note. We'll do one by one. This is working note on debenture. Fast. Done? Do the journal entry and ledger, both people. Over. Coming back. Guys, 10% debenture account is automatically balanced after redemption. Nothing in that. Okay. Unpaid interest on debenture. Unpaid interest on debenture. So opening balance is 275, closing is 1175. Can we open the next ledger, guys? Interest on debenture. Interest on debenture, the unpaid interest on debenture account. So what account is this, people? Outstanding interest account. So basically, this is the liability account. Outstanding interest on debenture account. Other current liability, right? Outstanding interest on debenture. By balance brought on. Opening balance is how much? 275. Okay. Closing balance, 2 balance carried on. How much? 1175. What is the journal entry if I record interest in the current year? Interest on debenture to interest on debenture payable. Then P&L to interest on debenture. So in the interest on debenture payable by interest or by P&L. So by P&L, current year interest on debenture. Now, how do you calculate this? The question is silent about the date of redemption of preferential, we should assume beginning. But what have they done? They've told here debentures were redeemed at the end of the year. Nothing mentioned means what? Redemption or issues at the beginning of the financial year. But here the question is very clear that the debenture is redeemed at the end of the year. So throughout the year, how much money has been enjoyed by the business? Full 1,10,000 into how much percentage? 10%. So 11,000 rupees is your current year debenture, interest on debenture. So 1,10,000 into 10%. Please make a note that whenever the question is silent about the redemption date, it is assumed at the beginning. But in this question, they have specified that the redemption is happening at the end of the year. Please make a comment like that so that in future when you revise, you don't have a problem. So how much is my total liability outstanding? 11,275 is my total outstanding liability. In that, actually at the end of the year, how much is outstanding? 1175. So how much is interest paid? To bank 10,100. Are you able to see the way we have prepared this outstanding interest ledger? The way you prepare the provision for tax ledger, the way you prepare the dividend payable ledger, everything was same. Everything is in same line. Are you able to realize this point? Now, this will affect my segment 2. I need to add back because this is non-cash item. In segment 2, I have to add back. This is current year debenture interest. In the finance cost, it is subtracted. To reverse, we have to add back. And this I will do cash outflow of the finance activity because this much is interest paid. This much is interest paid. Any problem? Online people, any problem in this?
No, sir.
Only one person responded online. Others, nobody opened your mouth also. Dharni Mohan, Haricharan, Madhu, Reshma. Are you listening to me?
Yes, sir.
Yes,
I know
Yes,
response when I'm asking them. Now, next is fourth point. Debtor of 36,000 were written off against the provision for doubtful debt during the year. Debtor of 36,000 were written off against provision for doubtful debt during the year. So what will be the entry for this? First entry. Bad debt to debtor. Very good. Then PFD to bad debts. Now listen to me very carefully. Small quick revision. Listen to very carefully. Provision for doubtful debts. By balance brought down. Let's suppose 10,000 rupees. Can somebody tell me what is the meaning of this 10,000 rupees? Fear of previous year. What was the fear of previous year? In the previous year, you feared that this 10,000 rupees may or may not come. So prudence concept says that if you're having a doubtfulness about the receipt of the money, if you feel that there could be a loss, if you're anticipating a loss, prudence concept says what? Record for your anticipated losses. In the previous year, what entry did you pass? Previous year recorded the entry P&L account debit to provision for doubtful debt 10,000, 10,000. Guys, 10,000 when I recorded in P&L account, which means what? I booked the loss of 10,000 rupees. Booked the loss of 10,000 rupees. So income tax department, trusting what we said, they have reduced 10,000 profit, and on the remaining profit they collected tax. Current year, further you are fearing that there could be a doubtfulness about 30,000 rupees. So by P&L, 30,000 rupees means current year fear. This is fear of current year. This is fresh fear. Whatever current sales you have done, no credit sales, in that you are fearing. Let's say the total sales that is 20 lakh. In that you are fearing that one person may not pay me 30,000 rupees. Why that fear comes, that I explained in the foundation level. I'll not go that deep. So in current year, what entry you will pass? Current year, P&L to again, PDD how much? 30,000 and 30,000. Any problem in this? Like that, how much total fear you have? 40,000 is total fear. Now, imagine, out of this 40,000, your fear become true to the extent of 5,000 rupees. So I'm telling you in the question additionally, bad debts is 5,000. Bad debts is 5,000. You have two options. How many options? Two options. Listen to me very carefully. Don't do anything. Option 1. Option 2. In both the cases, option 1 and 2, my first entry is going to be same. What entry? Bad debt to debtor. In both the cases, going to be same. So in option 1, it is bad debt loss, debit all expenses losses to debtor. Bad debt will reduce the debtor. Means to that extent, I'm not receiving the money. Confirm money will not come. So I will decrease my debtor to that extent. How much? 5,000, 5,000. Again, bad debt account debit 5,000 to debtor. I'm doing two different cases. In first option, this bad debt 5,000 is there, no? You will assume that this 5,000 is not out of this 40,000. This 5,000 is apart from 40,000. So this was, let's say, a fear from Mr. X. You thought X will pay this money or not. This was a fear from Y. Y will pay this money or not. The actual bad debt happened of A. So this is not as per your provision. Out of nowhere, surprisingly, it happened. So for this 5,000, which is bad debt of A, did you create any provision? No. So one, you can make this assumption. In exam X, Y, A and all, they'll not give you. You have to assume which method to go. Both methods are applicable. In schedule 3, we went with option 1 only. In schedule 3, what they said, whatever bad debt came, you'll assume everything is new bad debt and you'll transfer directly to P&L. So now what is my transfer entry? We transfer this to P&L because this is new debt. This I never recorded. This loss of 10,000 and 3,000 I recorded, which is the loss of X and loss of Y. In the P&L I recorded. But out of nowhere, A became bad debt now. So this loss, did I ever record? No. So I'll assume that A is a new person who has not given me the money and I'll transfer this entire money to P&L. So P&L account debit 5,000 to bad debt 5,000. Any problem? So bad debt ledger is opened here and closed here. So in the P&L account, what will record? To bad debt 5,000. Apart from that, current year P&L, what entry you passed? P&L to PDD. So again, to PDD how much? To PDD 30,000. So this is bad debt of A. This is bad debt of Y. Bad debt of X is already recorded in previous year, boss. See, not bad debt, provision, sorry. This X ka provision is recorded in the previous year P&L. Y ka provision, new provision, current year. So it is Y provision of current year, not bad debt I said. It is Y's provision of current year. And whose bad debt actually happened? A. So this is bad debt of A. X's provision last year. Y provision current year. A's bad debt current year. Any problem in this? This is my P&L. This is one methodology. This is one option of accounting. In schedule 3, we follow option 1 only. In schedule 3, we follow option 1 only. Now comes option 2. Now, did they tell that this is bad debt of A in the question anywhere? Did I say no? We assume it is A. Now, your assumption can be this also. No, sir, I think X did not pay, or I think Y did not pay. Any assumption I can do. So, if you think that this 5,000 is out of X and Y, now will you transfer this bad debt again to P&L? No, if you think this 5,000 is out of the provision that you've created, so that provision is already transferred to P&L of last year and current year. Will you again retransfer the bad debt to P&L now? No. Then how will you close the bad debt ledger? By knocking off against provision for doubtful debt. So what is entry going to be here? Provision for doubtful debt, account debit to bad debts. How much? 5,000, 5,000. So now in the PDD account, what will come? In the PDD, 2 bad debt will come. 2 bad debt is how much? 5,000. How much is the closing balance of the provision? 35,000 is the closing balance of the provision. Okay. Now in the P&L, what will happen? In the P&L, what will happen? Bad debt, you adjusted against provision. So what is the actual provision created in the current year? 30,000 P&L to PDD. So how much is the provision for the current year? 2 PDD. 30,000. Any problem? Online people, any problem?
No,
Is it right?
sir. No, sir.
10 plus 30 is how much? 40. In that 5,000 bad debt gone, 35,000. Correct or not correct? 30,000 rupees is the current year. Current year provision. So how much is my current year loss? 30,000. In this case, loss is different because you are assuming this is a loss of a different person. This is a current year provision. So 35,000 loss. If it is loss of the previous year, if it is loss of the previous year, then what will happen? If the 5,000 is the provision written off from the previous year, then current year my loss is going to be 30,000 because there is no fresh loss. Why I'm explaining this? Because you might have a doubt, sir. In this question, the loss is totally 35,000. Here, why it is 30,000? Are you able to understand the difference? In this question, why it is 35,000? Because we had a 5,000 fresh loss. Apart from 30,000, we had a fresh loss of 5,000. Here, are we having a fresh loss? No. 10,000 opening balance, in that 5,000 loss happened. Which means this 5,000 loss is already booked in the last year's P&L. That's why the loss of current is only 30,000. Now, okay. So now we have two options. One, this bad debt will be taken to the current year's P&L, or this bad debt will be knocked off against PDD. These are the only two options. What is the doubt here? Why Balaji? Why doubt? Second part, bad debt to, sorry, PDD to bad debt. You are telling that this 35, this 30 should be always same. How it will be same? When I go with option 1, 5,000 is new bad debt, fresh bad debt. So 10,000 is old bad debt X. Now that will come. We'll come back to this question. What they've done? Debtor of 36,000 were written off against provision for doubtful debt. So here what option they followed? Option 2 they have followed. Debtor of 36,000 where means debtor of 36,000 written off. Debtor of 36,000 written off means what? Bad debt. Bad debt is recorded against provision for doubtful debt. So now what is the entry here? So this is working note 1. This was working note number 2. Interest on debenture was working note number 2. Now working note number 3. What is the journal entry for bad debt? So bad debt account debit how much? 36,000 to debtor. Yes, when the bad debt is known, that time only you reduce the debtor value. So bad debt to debtor is 36,000, 36,000. So the question says that this bad debt has been knocked off against provision for doubtful debt. So which method have they followed? Option 1 or option 2? Option 2. In that case, what is the entry? Provision for doubtful debt account debit to bad debt how much? 36,000, 36,000. My question goes to all of you. Is this affecting anywhere the current year's P&L? If it is affecting P&L, then this will have impact on segment 1 and segment 2. If it is affecting P&L, had I followed option 1, then the bad debt or the provision would have been transferred to your P&L. Like that, any bad debt or provision is created in the current year? No. So in segment 2, we have to not make any adjustment. And apart from that, there is no other changes. So this will not affect my cash flow from operating activity. But whenever they give you debtor value, opening and closing change, that time the current asset, current liability part will be taken care of. Now in this part, they have not given the other balance of the debtor. So we cannot take any difference of the debtors now. Yes, Kanam. If the question says that maintain period at this much percentage, means in 12th standard, in 11th standard, in foundation, I taught you how to do questions based on this. We did at least 10 questions based on this. We did 10 questions based on this model where each question was different from one another. So if anybody still have a doubt that how a PDD ledger needs to be created, then you have to go back and refer those videos of my 11th and foundation, because there extensively we have done multiple questions. Here I can do a recap of that, but doing all the varieties could be difficult. If you have any specific question, I can answer.
Already the closing balance plus whatever amount we should put it PDD extra.
Correct.
That will be going to pay.
Correct. So see, now PFD can be opened in two ways. If I'm going with option 1, in option 1, bad debt you transfer always to P&L. In that case, opening provision will come here, current year PFD will come, and closing balance of PFD will come. Opening balance will come, current year provision, closing balance. Only these three items will come. In this will affect my segment 2. I have to add back in segment 2 because current year provision is subtracted from my current year's profit. There is no cash outflow. So to cancel that, we have to add back. This is one ledger under which method? Option 1. Option 2, what happens? You record the opening balance, current year P&L, and you reverse it to bad debt account, and then you get the closing balance. So 4 items will come in option 2. In option 2, how many items will come in the ledger? 4 items will come in the ledger. In option 1, where the bad debt is directly transferred to P&L, so bad debt does not come to PFD. In that case, how many items will come in the PFD account? Only 3 items in the first option. In this, if you have any doubts, please ask me. If I come to option 1, I'll just make a note here. If I come to option 1, opening balance of PFD will come here. Then current year PFD will come. Then bad debt will not come because bad debt is directly transferred to your P&L. It is not going to PFD. So directly what will you come? Closing balance of PFD will come. Any problem? Provision for doubtful debts. Any problem? If I'm going under option 2, in option 2, what will come? Opening balance of not PFD, actually it's PDD. Because PFD means what? Provision for depreciation. Provision for doubtful debt, the short form what we kept is PDD, provision for doubtful debts. So opening balance of PDD, then current year PDD, then transfer to bad debts, and then closing balance of PDD. 4 items will come under option 2. 4 items will come under option 2. Yes, don't by heart, understand, because if you by heart, things will not serve you. Because when we worked out this question in foundation, we had multiple varieties of questions, multiple ways to twist. So by hearting will not help you. Whatever we studied in foundation, everything is applicable here. Today morning, what message I put in the group? Revise the concept of provision for doubtful debt, which means I asked you to revise from both foundation book and TSG book. How many of you did not touch TSG book? Because the variety is there only. In foundation book, what variety is there? Nothing is there. The variety is there where? TSG, multiple varieties.
Sir.
Yes, Kanam.
Sir, I have a question, sir.
Yes, boss.
Sir, anyways, we have debited a PDD account the last year of 10,000 that we had a fear that this year we are not going to receive it.
You're
sir.
talking about the example what I gave?
So again, when we debit that 5,000, yes, sir.
Go. Tell me, Kanam. You're telling
Then
the last year
again, if we
10,000 already
debit
you've
that
debited in the last
5,000
year's
as
P&L.
bad debt in the P. Yes, sir.
Okay. What is the doubt in that?
We have debited that because we had a fear that we are not going to receive that.
Correct.
And now it became obvious that we are not going to receive that 5,000, sir.
Okay.
So when we again debit it in the P&L account as bad debt, won't that 5,000 be benefit for the SSC, sir?
No. See, I told you two cases are here. One case is where this 10,000, I'm assuming the provision for X, some other party. When I came and I did option 1 and I said bad debt is happening of this 5,000, this is of party A. Means this 5,000 is a fresh bad debt which happened and which I got to know only now. In that case, I said you this 5,000 is transferred to P&L once now. If I'm going with option
Okay,
2,
sir.
if I'm going with what you are saying, no, sir, this 5,000 is not belonging to A, it is going to X. In that case, I will not transfer this bad debt to P&L. I'm transferring this bad debt directly to PDD. No, now. So in option 1, this 5,000 is
Okay,
assumed
sir.
of the bad debt
So
of A. In option 2, we assume this 5,000 is bad debt of X or Y.
Okay, sir. So we basically record it individually, no, sir?
Individually, that's right.
Okay, sir.
Now, so please tell me, people, this entry, will it affect my cash flow statement? Bad debt to debtor, then PFD to bad debts. Will this affect my cash flow statement? No. Then 10% bond investment. Opening balance 350, closing balance 350. Accrued interest on investment is 10,500. Now, guys, for beginning till end, the entire year the amount invested is 350. On 3,50,000, what is the interest, people? 10%. How much it should be? 35,000. In that, they're telling that 10,500 is accrued interest. Means what? Income earned but not received. So out of 35,000, 10,500 is not received. So what happened to balance amount? 24,500. What happened? Amount is received. Amount is received. So now both of these put together, 35,000 rupees, it is income. It is added in your other income. Money, forget the money part. 35,000 is included in your other income. But what activity is? It is non-operating activity, but it is added in operating activity. So what am I supposed to do? Minus this 35,000 in the segment 2. And since this money is received, it is cash inflow of the investing activity. Which part? Only 24,500. Only 24,500. Clear with this part now? Now can I do the entire question? Let's do it. Come on. Profit is not given. What will you do? Put profit as X and 0 and leave it. I mean, not 0. That is not given. It is dash hyphen. See. Net profit as per P&L. That is net profit before tax and extraordinary item is this. Come back to the question, guys. 10% debenture. In that, what did we agree? Premium is my yes. Premium is added back in segment 2. Premium is added back in segment 2. So add premium redemption of debenture 1650. Current year loss. Loss on redemption of debenture. Loss on redemption of debenture. Loss on redemption of debenture. Please write it down. You can write in bracket also. Add premium redemption of debenture either in bracket or below. Somewhere please write it. So this is nothing but loss in redemption of debenture, which is known to you only in current year. Then interest on debenture is how much? We calculated. Interest on debenture 11,000 rupees we have to add back. Add interest on debenture 11,000 rupees. Give reference to working note number 2. And for the previous one, you can give reference to working note number 1. Then point number 4 is not affecting, leave it. Point number 5, we have the impact in the interest part. So what is interest? I'll do the working here if you want. Guys, you have to mention a note here that this transaction is not having any impact in your cash flow statement. You have to write a note like this. For which? That 36,000 bad debt. You have to write that this has got no impact on your cash flow statement. Now working note number 4. Interest earned is how much? 3,50,000 into 10%, which is 35,000. In that 35,000, interest earned 10,500. Interest earned but not received. But not received. So balance is how much? 24,500. Interest earned and received. Interest earned and received. So what is my total interest earned? Accrual concept says that record the income which is earned. So I would have added this in your other income. So this is included in your net profit before tax and extraordinary item. It is included. But we have to minus it. We have to remove it. So less interest. How much? Full 35,000. In that, how much money is received? Only 24,500 is received. So this will be added back in your cash flow from investing activity. So interest on investment 24,500 will add back. We cannot do the entire cash flow statement because they have not given all the information. They have given only scattered information. So kind of this is an extract, but not a complete cash flow statement. This one. One second. You want me to present the ledger? Can you please tell me the entry for this? Interest income account debit 35,000 to accrued interest 35,000. Sorry, I said ulta. Income is gain, create all income and gain. So to interest income. To interest income 35,000. In that, how much is received? Bank account debit 24,500. Remaining is not received, it is asset. I'll receive in future. Anything I receive in future is asset. So accrued interest account debit 10,500 to interest income. And this interest income is transferred to your P&L account. 35,000, 35,000. Journal is clear? In ledger, what will you want? Which ledger karna? Accrued interest? Accrued interest. What is the posting? To interest income. How much? 10,500. Closing balance 10,500. Balance brought down 10,500. Since she's asked, I did it. Otherwise, not required. Done? Coming back. Guys, the debentures were redeemed. Debentures were redeemed. So what is the cash outflow? Total money that is outflow is how much? Total money outflow is 34,650. So redemption of debenture 34,650 and interest on debenture paid is 10,100. Interest on debenture paid is 10,100. We already wrote it. This is a cash outflow from financing activity. So this was not a complete cash flow statement where you can get a hold of it. This is a scattered cash flow statement. To get a grip is little difficult. So mark this question important. Chances are that this type of question also could come in exam for 5 marks. If they want to test your concept, main concepts here and there, they might ask this also. Which one? Which one? 35,000 rupees we have to. You're talking about interest on income. We have subtracted no, na? Not added. We have to subtract no, because it's already added in the profit. To remove, we have to subtract. No? We have subtracted 35,000 here. See? Under the operating entity, subtracted. Which question is this? 9th question, no? Next is 10th question. Ten, 13 and one scanner question. 3 more questions, people. Break up. Appadina? You guys are C-enter people, man. You don't need break. End of the day, you're human now. So what was what were you in the beginning of the day? End of the day, human being. Beginning of the day, alien, huh? See, if you don't take the break, I'll accept that you're a superhuman. Chalo, 7 o'clock now, 7:05 sharp, we are starting. Thank you. Take a break. Yes, people, welcome back from the break. So let's continue. Guys, the next question is 10th question of your book back or chapter back, you can say. We completed 9th one, now 10th one. From the following balance sheet of Grow More Limited. Aha, what a name. Prepare cash flow statement for the year ended 31st March 2001. So this is question, Siddharth, pertaining to which financial year? Which financial year? 2000, 2001. Siddharth. Balance sheet, I'm not interested. So I'll go to notes. Notes also I'm not interested because I'm interested into first additional information. Depreciation 25% was charged on the opening value of the plant and machinery. So plant and machinery, I'm putting one star mark. So on the opening balance 5 lakh rupees, they have charged 25% depreciation. Wonderful. At the year end, one old machine costing 50,000, whose WDV was 20,000, was sold for 35,000. Purchase was also made at the year end. The question is silent, purchase at the beginning. But if question says end, then you should follow end only, no, boss. So I'm putting one more star mark for machine, for adjusting the sale of assets. Machine. 50,000 was paid towards income tax during the year. So I'm coming to provision for tax. Provision for tax, I'm putting one star mark. Anything else, please? Oh, yes. 4th one, construction of the building got completed at the end of the year and hence no depreciation was charged. Guys, depreciation charges from when? Once you start putting the asset into use. Till 31st March 2001, you were constructing the asset. So till that, depreciation will not come, no. So next year onwards, depreciation will come. So come to your building part, one star mark for land and building. Wonderful. Only few adjustments. Okay. Now, after looking at the additional information, the next information that look into is notes to accounts. General reserve people, from 150 it became 2 lakh. Means during the year, 50,000 is transferred to your GR from your P&L. So in segment 1, I need to add back. Transfer to reserve comes where, boss? Transfer to reserve, segment 2 minus. Segment 1, what did I say? Add back, no. What I said? To add back. See, from the P&L, 50,000 is transferred to general reserve. So in the P&L, you have subtracted 50,000 towards general reserve. So while reversing, we have to add back. No, boss. In segment 1, I'll add back. Buy it out. Surplus is there. Closing surplus. Add equity dividend. Add preference dividend. Add interim dividend. Add transfer to reserve. This is transfer to reserve, no, boss. All this while in format. Add this, add this, add this. Now when the time is there to add, you're telling minus. General reserve 50,000 is added. Now segment 1, what are we taking as a base? Surplus is taken as a base. To get the surplus, you subtracted the 50,000 and transfer to GR. So to reverse, you have to add back, no, boss. So segment 1, add back. Is what I'm saying. What are you saying? Yes. What happened, Alvin? No problem. Okay. Profit and loss account balance. Previous year 60,000, current year 1 lakh. So this is current year surplus. 40,000 is your current year surplus. With this 40,000 only, this difference need to be added. 50,000 I need to add. Any problem?
No, sir.
So this also is segment 1?
Yes, sir.
Okay. Long-term borrowing. Debenture issued at the end of the year. Debenture issued. From 0, it is 2 lakh. So it is cash inflow of the financing activity. Okay. Dividend payable. Same treatment what we did in the 7th question. Same, instead of 1,000, it is 1 lakh. So I'm putting a star mark here. We have to open the dividend payable account. Okay. Now, plant equipment, land building, everything over. So when I open the plant and machinery, land and building ledger, actually I'll get to know which segment, which activity is affected. So now I cannot tell anything. Debenture interest, what will you do? Debenture is issued at the end of the year. Now, cash and cash equivalent. Cash and cash equivalent only. Trade receivable, segment 3. Inventories, segment 3. Non-current investment, no note number is given. From 0, it became 1 lakh. You have invested money. Cash outflow of investing activity. Property, plant, equipment taken care of. Short-term provision, I put a star mark. We'll open the ledger to decide. Other current liability, note number is there. What is the dividend payable? Okay. Trade payable, segment 3. Long-term borrowing, debenture taken care of. Reserve surplus taken care of. Share capital from 8 lakh, it became 10 lakh. Issue of share capital. Cash inflow of financing activity. Is the roadmap clear now? Please write heading. Cash flow statement for the year 31st March 2001. Before that, in the books of Grow More Limited. Two 2001 only, no? Okay. Now, net profit before tax and extraordinary item. Oh, sorry. Before that, cash flow from operating activity. That's why there is something was missing. That pink color was missing. Cash flow from operating activity. Under that, net profit before tax. If I feel lazy, I'll not add extraordinary. Working note number 1. Calculation of net profit before tax and extraordinary item. Lazy goose. Surplus of current year. How much? Tell me the whole value, man. 1 lakh minus 60,000. Current year minus previous year, previous year minus current year. Current year minus previous year, 40,000. Add back equity dividend. Any information of equity dividend? Donkey fellow, don't decide that way. There's a dividend payable ledger. So you have to open dividend payable ledger first. Dividend payable by balance brought down. How much is the balance brought down? Opening balance. Only people, how much is the opening balance, people? Only people, good morning. What is opening balance?
1 lakh, sir.
Everybody is sleeping.
1 lakh, sir.
Dharini only responded. How about Haricharan, Madhuvarshini? Haricharan, which question we are doing, Kana? Charu? Haricharu? ये बाल छोड़ रहा है. Charu is cheating here, not answering. Manisha?
सर
Which question are we doing, ma?
सर क्वेश्चन नंबर नहीं पता पर मैं कर रही हूँ.
क्वेश्चन नंबर नहीं पता मैं कर रही हूँ. हाथ में बुक है नहीं है.
है सर, ढूंढ रही थी अभी क्वेश्चन.
She's searching the question where it is. Wonderful, wonderful, wonderful.
सर क्वेश्चन नंबर नहीं पता, क्वेश्चन पता है.
So without question, book in hand, without reading the question, what are you doing then? All of you have the book in hand?
Yes, sir.
Just because I'm showing the PDF on the screen, are you closing the book and keeping? So all of you know what question number we're doing?
Yes, sir.
How come Manisha offline people know what question number and you don't know? Chalo, I'll ask one question what I said asked earlier. If you're answering that, well and good.
Yes, sir.
I said one point related to point number 4. Construction of the building got completed and hence no depreciation may be charged. What explanation I gave here? What happened, ma? I gave an explanation there that time. Which means Manisha is not listening to class. Okay. Next. Haricharan. Irkeda? Not there. Wonderful. உங்க அப்பாக்கு நீ phone போயிடுண்டா. Madhuvashni, you're listening?
Yes, sir.
Which question number, ma?
Sir, I don't know question number, sir, but I know what question is going.
Yenama?
Sir, I don't have book in my hand, sir. I'm just
book
using
எல்லாம்
the
எதுக்கு
PDF
பண்றீங்க
what you're
classல?
showing.
எங்க இருக்கு book அப்புறம்? Where is the book?
Sir, in my room, sir.
So what are you doing outside room?
Sir,
Only giving quality time.
Wi-Fi issue, sir, so I came to hall
Now
to
only
attend,
understood
sir.
why I got cholesterol in the border level. You guys are giving me all the kind of cholesterols here and there. Everything got deposited in my heart. Karna my heart weak head ma. Ayyo, such dangerous people, online people are. Very difficult to trust now. எப்படிடா? Madhu, like that if you do know, I will call your dad. Madhu, send. How you send for foundation?
Sir,
Like
no, sir, only today, sir.
only today what? You didn't concentrate, eh?
I'm not using books, sir.
சரி next class வைக்கிறேன் நான் டெஸ்ட் திருப்பி.
Okay,
Anita
sir.
ma'am, call Haricharan's father. Arrange for a meeting with Haricharan. நானே மறந்துட்டேன் எந்த கொஸ்டின் பண்றேன். We are doing dividend payable. Okay, right. Dividend payable. Hello. 1 lakh. Okay.
Zero.
Wait, man. So, okay, right. 2 balance carried down 0. Understood. My question is, what is current year dividend proposed or approved in the meeting? Not given. So, current year no dividend is approved. In the previous question, we had 1,000 rupees as opening balance. Current year dividend proposed 2,000. This information is not given. So, in current year no dividend is approved. So, nothing would have been proposed. Nothing is approved. So, whatever is the pending of the previous to previous year, that is paid in the current year. Previous to previous year proposed, previous year approved, should have been paid in previous year, but we didn't pay in previous year, so it was outstanding in the previous year. Now in current year we have paid because the closing balance is 0. So to bank how much? 1 lakh. So this is dividend paid. So I'm not bothered. This is of current year or previous year. All I know is this is paid cash outflow of financing activity. Cash outflow financing activity. Any problem here? So this is not affecting my segment 1 because current year dividend is not proposed. Now how this ledger can be useful is because sometimes they'll give you the opening balance, closing balance and dividend paid. This will become the balancing figure, which is nothing but current year's dividend approved. So in segment 1, you would have added back. Equity dividend, this would have been added back. Previous year dividend approved current year, right only. But approved in current year. Previous year dividend approved in current year. Approved in current year. Approved in current year is always which dividend? Previous year. Okay. This 1 lakh is previous to previous year dividend approved in previous year. This dividend, previous year dividend approved in current year. Now clear? Okay. So preparation of this ledger is very, very important. Please do not skip it in the exam. Okay, coming back. Equity dividend not there. Preference dividend not there. Interim dividend not there. Transfer to reserve, yes. 50,000 is transfer to reserve. Subtracted earlier. Now to reverse, we have to add back. Transfer to reserve. In bracket, I'm reversing that. How much? 50,000. Okay. I will get what? Profit after tax. Then I have to add back provision for tax. What is provision for tax? So we don't know. We have to open the ledger for that. So please open the next ledger. So this is working note number 3. Working note number 2 was for dividend payable. Working note number 3 is for provision for tax. All those who said we didn't have any grip in provision for tax, now we are having grip. Dharni, grip is there on provision for tax little bit now? Okay.
Yes, sir.
Now, provision for tax, what balance? Credit balance. Opening balance comes on debit side.
70,000. Credit side.
Where should it come? Credit side. By balance brought down. How much? 70,000. To balance carried down. How much? 1 lakh rupees. If you come to additional information, the additional information says that 50,000 was paid during the year. What is entry? Provision for tax to bank. How much? 50,000. So now by P and L, current year provision is how much? 80,000. Now this will affect my cash outflow of the operating activity. Where? Which place? Segment 4. Segment 4. And this is segment 1. We have to add back. Segment 1 we have to add back. So currently we're doing segment 1. In this 80,000 will add back. From the profit I would have minus the current year provision. So while reversing we have to add back the current year provision only. Any refund information? No. Provision for tax. Reference, give reference to working note number 3. How much it is? 80,000. So I get profit before tax. Any extraordinary item? No. So this becomes my net profit before tax and extraordinary item. How much? 1 lakh? 70,000. Okay. Segment 1 over. Next is segment 2. Segment 2 is what? Add non-cash and non-operating expenses and less non-cash and non-operating income. So add non-cash bar non-operating item which is expense in nature. Now for this I have to prepare the plant and machinery, land and building account. Open it. Working note number 4. Plant and machinery account. Correct, no? Plant and machi account. To balance brought down. How much? Opening balance is 5 lakh. Okay. By balance carry down. How much? 7 lakh. Okay. Then question further says that depreciation was 25% charged on the opening value. So by depreciation 5 lakh into 25%, which is 1 lakh. 1,25,000. Okay. Then at the end of the year, one old machine costing 50,000, whose WDV is 20,000. Means how much is accumulated depreciation? 30,000 is accumulated depreciation. WDV means what? Remaining cost. Remaining cost 20,000 was sold for 35,000. So you sold at a profit of 15,000. 15,000. It is sold at the end of the year. So in this depreciation itself, in this depreciation, monkey one is correct, covered. So this depreciation is the depreciation on the asset sold as well as the depreciation on the asset still being used in the business, both put together. So monkey 1 entry over. Next is monkey 2 entry, which is for profit. So top profit on sale, how much? 15,000. And money received is by bank, how much? 35,000. Monkey 3 entry. Done. Now the ledger is tallying or balance is there. So balance is coming, which is nothing but 2 bank, which is the purchase of the asset, 3 lakh 45,000. Okay. So now this will not affect my cash flow statement. This in segment 2 I need to minus because profit is already included in your net profit before tax and extraordinary item. That is other income. So we have to reverse it minus because we have to add back in cash flow from investing activity. And this is cash outflow of investing activity. Depreciation. Segment 2 I need to add back. By bank, cash inflow of investing activity. This will not affect anywhere. So immediately can we record the segment 2 items? Yes, segment 2 depreciation, please add back. Depreciation. Which working note reference I should give? 4. Working note number 4. How much it is?
1,25,000.
1,25,000. Leave some line, some 2-3 lines. If extra 1 line also leave, nothing wrong. Less non-cash and non-operating income. Profit on sale of plant and machinery, working note number 4. Minus how much? 15,000. Come back to next working note number 5, which is nothing but land and building. Working note number 5, land and building. Opening balance of land is how much, people? 4 lakh rupees. To balance brought down 4 lakh rupees. By balance carried down 6 lakh rupees. What is difference? 2 lakh rupees is the difference, which is nothing but new building got constructed. So you've been constructing the building. So this 2 lakh rupees is what? Capitalized. Construction of the building got completed, hence no depreciation to be charged on the same. So nothing but 2 bank. This is the completion of the construction. Completion of the construction. What have they recorded? You not open the ledger itself. Oh my god. We will open it. 2 bank. 2 lakh is completion of the construction. Remaining completion of the construction. So this is nothing but your cash outflow. Cash outflow of the investing activity. I'll take care of the investing activity. Okay. Come back.
What is that completion point?
Sorry?
So that completion point, what is that?
This is to make you understand that the building value has increased not because you purchased a new building. This means that you've been constructing a building and the additional construction what you've done in the current year is for 2 lakh rupees. Now, this point 1 is affecting by any segment? No, not this, neither this, nor this. No, I impacted. No, after that I'm telling. Anything in your notes to accounts which is affecting your segment 2. Anything segment 2, I can't say any mark of segment 2 in the notes. Now, anything in current asset affecting segment 2? No. Anything in non-current asset affecting segment 2? No. Anything here in current liability affecting segment 2? No. Nothing. That's all.
Operating.
Total is
2,80,000.
2 lakh 80. 2 lakh 80,000. What is this called as? Operating profit before working capital changes. Then
increase in operating.
Add increase in operating current liability. Don't write operating there, just for knowledge purpose I'm writing. And decrease in operating current asset. Less decrease in operating current liability and increase in operating current asset. Let's go to balance sheet. Current liability I have trade payable. From 820 it became 7 lakh. From 820 it became 7 lakh. How much? 120 decrease. Decrease in current liability, add or minus? Less. Trade payable is reducing because we made payment, cash outflow. Trade payable. 8,20,000 minus 7 lakh. In bracket, you should write 1,20,000. Okay. Other current liability includes dividend payable. Dividend payable will not be coming here. It goes to your non-operating item. Here I'm bothered about which activity, which current liability, operating current liability. This is not my operating current liability. Dividend payable is my non-operating. That is finance activity current liability. Short-term provision also is like that only. Short-term provision also is not operating. It is non-operating. But tax paid in this will be affecting my segment 4. It is not a part of my current asset or current liability. Coming down here, we have inventories and trade payable. Inventory increased. Increase in inventory is asset minus because more asset we have purchased, cash outflow. More inventories we have purchased. 4 lakh minus 2 lakh. So negative 2 lakh. Trade receivable from 7 lakh, 5 lakh decreased. Means we have received the money, cash inflow. 7 lakh minus 5 lakh. 2 lakh rupees is the cash inflow. Any problem, online people? So further you have to listen, no, sir.
Listening, sir.
I'm be done. Next time you answer properly, then I'll believe. என்னம்மா இது? This luxury I have. என்ன சிரிக்கிற? 1,60,000 positive, negative? Positive. Cash generated from operations. Next. Less income tax paid or tax paid, whatever it is. How much? 50,000. How much? 1,10,000. What is this called as? Cash flow from operating activity. Okay. Cash flow from investing activity. Cash flow from investing activity. Share capital. Hey. Let's talk about plant, machinery, land building. Working note 1, leave it. Working note 2, leave it. Working note 3, leave it. Working note 4. Purchase of plant and machinery, sale proceeds of land and machinery. Okay, 2 items here. Proceeds from sale of plant and machinery. How much? 35,000. Then purchase of plant and machinery. How much? 3,45,000. Bracket is very important. For a second, forget your dinner tonight, but don't forget bracket. Hey, என்னடா சிரிச்சிட்டே இருக்க? Land and building. Construction. Construction of building 2 lakh. Payment towards construction of building. How much? 2 lakh in bracket. Then come back from the beginning, balance sheet. Non investment. Non-current investment from 0 it became 1 lakh. So purchase of investment. Purchase of investment again in bracket 1 lakh. Any current investments? No current investments. Anywhere investment activity is getting affected apart from this? That's all.
6,10,000.
6,10,000 is negative. Cash used in investing activity. This is point B. Next is cash flow from financing activity. Now come from the beginning. Proceeds from issue of share capital, how much? 2 lakh. Proceeds from issue of share capital, 2 lakh. Inflow, outflow? Inflow. Come down. Reserves and surplus, taken care of. Long-term borrowing. Long-term borrowing. Issue of debentures. Issue of debentures. Proceeds from issue of debenture, how much? Again 2 lakhs. Dividend paid, how much?
1 lakh.
Dividend paid. Working note number? 2. 1 lakh. In bracket. Guys, dividend paid here is 1 lakh. Cash outflow from financing activity. Anything else?
3 lakh cash flow from finance.
3 lakh is the cash flow from financing activity. Financing activity, point number C. Then D. Net increase or decrease? Decrease. Negative, how much?
2 lakh.
2 lakh is in bracket. So net decrease in cash and cash equivalent. Net decrease in cash and cash equivalent, 2 lakh. Add opening cash and cash equivalent. How much?
2 lakh.
2 lakh rupees. Swaha. Closing is swaha. Nothing is there. Everything they finished. Thank you, fellows. Ama. Sir, more.
Not more, sir.
Huh? Who's like more? I'm doing more. More sums we're doing. 11 homework. No, 11 homework. Nahi. Class work for me only. Not now. Future class. Happy? You got motivation to do one more question? 13th question. With this, we'll wind up.
It's
What extra point to be discussed? That I can discuss whenever I want to discuss. என்னப்பா நீ எக்ஸ்ட்ரா கிளாஸ் கேக்குற அவன் கிளாஸ் வேண்டான்றான். See, we can't go at this pace. How many questions in total? Tell me. 14 question.
14 plus.
How much in the ICAI study module illustrations? Illustrations. No homework. All I have to do.
20 exams.
Illustration. How many questions in total? 11 or 12? 12 are there. And then from question number 9 till 14. So 9, 10, 11, 12, 13, 14. 6. 12 plus 6 how much? 18 questions. In the, how many questions we have completed so far? 5 questions hardly we have completed. Remaining you have to do. Plus PEP questions are there. What you want me to take? Your foundation, not foundation exam. Inter exam to next Jan 27. Huh? What are you guys trying to play with me or what? So chap 13 question we are doing now. Easy question. Chumma taking stress for this. You should be like online people. No impact will happen. How much ever stress I give, nothing will happen. No, Manisha?
Sir,
Manisha is like, paisa maina mandir pe. Class is till 8:30, no? Then what? Hey, I can't start at 7:45 and finish at 8 o'clock this question. Huh? So my point is we'll do till 8:30. Your point only, my point. ABC Limited gives you the balance sheet as at 31st March 2000 and 31st March 2001. You are required to prepare cash flow statement by using indirect method. Oh. Wonderful. By as per AS3 for the year 31st March 2001. Okay. You guys finish talking, I'll wait. No problem. If it extra time I'm taking, then I'm not the reason behind it. It's because of Nishi and Manvi. Finished? Finished? The whole class is waiting for you both only. Correct, no? Whom are you waiting for? Yarikpa? Now, I'm not interested in balance sheet. Not interested in notes to accounts. Directly additional information. Net profit for the year ended 31st March 2001 after charging depreciation of 180 is 1040. Aha, super sir. One more time. Net profit for the year ended 31st March 2001, which is current year's P&L, after charging depreciation of 1,80,000 is 1040. What is 180 depreciation? What is 1040?
Net profit before tax.
Net profit before tax and extraordinary item. They didn't say net profit is after tax and amortization items, or sorry, after tax and appropriation items. So here this 1040 is what? Net profit before tax and extraordinary item, directly given. Such an easy question. Why are you taking stress? Now, trade receivable of 230 were determined to be worthless and were written off against the provision for doubtful debt account during the year. Which option? 1 or 2? Option 2. Tell me the entry. Bad debt to debtor. 2,30,000. 2,30,000. And then very good. PDD to bad debt 230. Any problem? Okay. What for me? That's all. Coming back. Trade receivable. Gross amount means what? Opening balance of debtor, closing balance of debtor, opening balance of provision for doubtful debt, closing balance of provision for doubtful debt. Balle only sir this sum. Okay. Plant and machinery. Depreciation they have given less depreciation. What method this is?
Provision for depreciation.
Normal method or PFD method? PFD word is not given, boss.
But separate ledger.
Accumulated depreciation also not given, boss.
They are reflected in the original cost.
Just because looking at the word PFD or accumulated depreciation doesn't mean that they follow PFD method. If you have a depreciation as a separate ledger balance, it itself means that yes. Sometimes this depreciation they'll refer as depreciation fund also. Still it is accumulated depreciation. Any name they can give. Name can change, but the emotion is same. Okay. Liability for expenses. What I should do with this? Segment 3 I have to impact. Dividend payable. In the dividend paid will be cash outflow, finance activity. And dividend provision created currently will be affecting my segment 1. I'm not bothered about segment 1 in this question because it is already directly given. Okay. 9% debenture issued at the end of the year. Previous year, current year, from 0 to 9 lakh. Cash outflow, finance activity. What about interest on debenture? No interest on debenture because issued at end of the year. What I said? Outflow. Sorry, my mistake. Cash inflow. Okay. Anything else?
No.
Now, by opening the property, plant, equipment ledger and trade receivable ledger, we get to know the other things. Go back. Other current assets have prepaid expenses. Segment 3. Prepaid expense is part of my operating activity. So this is operating current assets. Segment 3 I have to take care of. Cash and cash equivalent only. Trade receivable, we'll see. Inventory, segment 3. Trade receivable is segment 3, but we have to prepare the ledger because in that provision for doubtful debt also is there. So you have to open the ledger and see. Current investment activity. Property, plant, equipment, leave it. Other current liability, we have how much? What we have in that? Dividend, both are taken care of. Okay, leave it. Trade payable, segment 3. Short-term borrowing from 3. Which year is first, pa? First year is, oh, this is previous year first and current year later. See, very careful. They'll change and give. You have to be very careful. From 150, it became 3 lakh. Further borrowings, you have done more borrowings. Cash inflow, finance activity. Correct? No, they've changed the column. Long-term borrowing also taken care of. Reserves and surplus, what is the difference? Please take the difference. 3690 minus 2650. 10 lakh 40,000. This 1040 is exactly matching with the profit before tax. So profit before tax is 1040. Surplus also 1040, which means in between provision for tax not subtracted. Those 4 items of appropriation not subtracted. So both are same. Both are same. So means current year provision for tax not recorded. Not there. Correct? No. Look at this. 1040 is net profit before tax and extraordinary item. And exactly the difference of surplus is what? 1040 only. Clear this point? Okay. Rest will take care when we do the question. Share capital from 50 to 50, no change. Can we start?
Yes, sir.
Okay. Which company, pa? ABC Limited. ABC Limited. Manisha, which question, Manisha?
So 13th question, practical question.
Very good. Now, next. Cash flow statement for the year ended 31st March 2001. Particulars, rupees, don't give it. Cash flow from operating activity. Net profit before tax and extraordinary item already given in question. 10,40,000 the outer column. Add non-cash bar non-operating expenses. So we have to first open the ledger, people. Working note 1. Without this, I cannot go forward. Let's finish off one by one, people. Let's talk about plant and machinery first. So one ledger for plant and machinery, another ledger for provision for trade receivable. Dini wheat kalam ra tu lar gaya. Path. Plant and machinery account. Not working on 2, man. Both are one only. Sapa. Provision for depreciation account. Please tell me the opening balance of plant and machinery. 27 lakh 30,000. All of you open your mouth and respond. 27 lakh 30,000. Don't sleep. Buy balance. Carry on how much? 40 lakh 70,000. What is opening balance of PFD? 6 lakh 10,000. By balance brought down 6 lakh 10,000. To balance carry down how much? 7 lakh 90,000. Okay. Then come down. Depreciation is given here 180. So by depreciation in the PFD account 1,80,000. Is the ledger tallying automatically? Tallying? Oh my God, super. So this will be affecting my segment 2. Add back in segment 2. Okay. Come to plant and machinery then. What will affect? To bank. Purchase of machinery. How much? 13 lakh 40,000. Balle balle. This is cash outflow. Investing activity. Okay. Thirteen forty we got plant machinery. Okay, 1340 we got. And depends is that. Okay, done. Super. Next working note number 2. What is the ledger's name? Trade receivables ledger. If anybody wants to go home, you can walk, no problem. Especially girls, if you want to go home on time. சாருக்கு என்ன கிட்னாப் பண்ண ஏதாவது வரவா போகுது, ஒண்ணுமே வராது வீட்டுல இருந்து. பண்ணா பண்ணிட்டு போறாங்க. நீங்களே கிட்னாப் ஆக கூடாதுல்ல. இல்ல வீட்டுல அள்ளி நிறைய கொடுத்துருவாங்க அப்புறம். Now to balance brought down. Krithnesh sir, we'll give you company sir. From my home also nothing is going to come. To balance brought down how much? 23 lakh 90,000. Huh? Sir, Hari is like, sir, if my Jodi is coming with you, I'll also come with you, sir. Too much big line, no? You one line parra, ye line edhuk parra ni, huh? By balance carry down. How much? 28 lakh 30,000. Donkey fellow. Tapa solradhu. 28 lakh 30,000. Huh? Next, provision for doubtful debt ledger, PDD ledger. Vara ella varana. PDD ledger. By balance brought down. How much? Opening balance 1,50,000. Okay. To balance carried on. How much? 190. Okay. Nishi, entry please for depreciation. Not depreciation. Bad debt. Bad debt account debit. You only came to me in break and asked this question, no? To debtor. How much? 230. 230. The question says that this bad debt we are not transferring to P&L because already this bad debt ka provision has been recorded earlier. So we are not again creating a new loss. This will be adjusted against the existing loss of PDD. So trade receivable of 230 were determined to be worthless and were written off. Loss is knocked off against the PDD. So what is my closing entry? PDD account debit to bad debts. How much? 230. Same 230. So in PDD ledger it will be 2 bad debts. 2 bad debts, 2,30,000. And in data ledger, By bad debts. Hey, every time by paid will come on. By bad debt 2,30,000. Instead of the word debtor, you can write the word / trade receivable also. So one impact in debtor ledger, another impact in PDD ledger, because bad debt opened and bad debt closed. So one impact is going in PDD ledger, another impact in debtor ledger. Any problem? Now please balance the trade receivable ledger and tell me what is this. 6,70,000. What does it mean?
Current year sales.
If the amount is coming on debit side, means increase in trade receivable. When does my trade receivable increase? More credit sale. So two credit sale. Now this 6,70,000 is included where? 670 is included in your revenue from operation. If this 670 is included in revenue from operation, this is included in your total income. If the 670 is included in your total income, it is included in your profit before tax. This is included in profit before tax for this money received. Paisa received. No. Then what am I supposed to do? Minus it. Minus from where? In segment 3. Minus segment 3. Let me cross check first what I said is right or wrong. Correct only I said. Hey, correct. Concept. Whenever you know the concept, no, you'll never go wrong. People can make mistake only with the by heart. PD. Now, there's a balancing figure coming here.
270.
How much? 2,70,000. If any amount is coming on credit side, it amounts to increase of provision. When does provision increase? When you create further provision. So by P and L 270. So what is the provision entry here? Third entry. Very good. P and L account debit 2,70,000 to PDD 270. Now this 270 in the P and L, where it is recorded? In other expenses, it is recorded. So it is minus from your total income, which means in the net profit before tax and extraordinary item, this 270 is subtracted. Subtraction is okay had there been outflow. Is there any outflow? No. So we have to add back in which segment? Segment 2. It's a non-cash item. Segment 2, we have to add back. So come back here, people. Provision for doubtful debts. Working note number 2. Add back how much? 2,70,000. In working note number 1, we had depreciation how much? 1,80,000. Depreciation. Working note number 1, 1,80,000. Now coming back to plant and machinery. Any profit loss? No. So this 1340 will affect my investing activity. I'll deal with it later. PFD depreciation recorded. Balle balle. Now, trade receivable 670 will be affecting my segment 3. Segment 3, I will have to minus. Segment 3 I have to minus because this is included in the profit. So I have to minus, remove it. There's no cash inflow. Minus it. Then PDD 270 taken care of. That's all. Wonderful. Entries, ledgers, everything you taken care of. All noted? Okay. Now please tell me any other segment 2 items to be affected.
No, sir.
No other segment 2 item? Okay. Tell me the total.
14,90,000.
14,90,000. This is called as operating
Profit before working capital changes.
Operating profit before working capital changes. Very good. Next. Add increase in operating current liability and decrease in operating current assets. You have to see first what and all is there. It's coming from top. Current liabilities, trade payable. From 820 it became 880. How much is trade payable increased? No, this is what we're habitual. No, from this only we'll see. 10 out of 10 questions, 7 questions will be normal manner, 3 questions will be ulta. But 70% question you've done in the manner where the first year is current year, second is the previous year. Now it is ulta. That is the format. But ICAI is trying to test that how much vigilant you are, how much of concentration power is there in the examination hall or not. They're trying to check that also. So now from 880 it became 820. So trade payable has reduced. How will it reduce? Only if I make the payment. So it is cash outflow of the operating activity. So less. Decrease in current liability and increase in current asset. Which current liability, which current asset? Operating current liability, operating current asset. So trade payable. How much is the difference, people?
60,000.
60.
Yes, sir.
Okay. Short term borrowing, leave it. Trade payable, done it. C is what? Short term. No, other current liabilities, we have two items. Dividend payable, segment 1 and finance activity. Leave that. Liability for expenses from 330 became 270. Decrease in liability. How? We made a payment. Liabilities for expenses. Again 60,000. Oh, wow. Next. That's all in current liability. Current asset we have inventory. From 210 it became 1920. Decrease in inventory means I sold the inventory, so money received. Cash inflow. How much? 90,000. Trade receivable. Trade receivable you already calculated. Working note number 2, 6 lakh 70,000 already calculated. Please don't take the difference. The difference is okay if there is no other item in the ledger. But in this ledger, we have one more alien coming and sitting. What is alien name? Bad debt. So by that virtue, we have to make the adjustment for bad debt also. Nishi. That's all. Oh, sir, prepaid expenses from 19 became 120. Prepaid expenses increases. How? You made more outflow of money. So minus prepaid expenses. Prepaid expenses. How much difference? 30,000. Prepaid expenses increase means for next year you paid more money, 30,000 extra. So it's cash outflow. What confusion? Any confusions? Increase in current asset will come here only, no? Tell me what is the cash generated from operation? 21 lakh. Wow. Cash generated. Innada doubt on again. Trade receivable, what am I supposed to do? Add or minus?
Minus.
Then why did you put in add? Who's the donkey fellow? Sumanyo, why man? Trade receivable 6,70,000. Those people who are watching recorded for a second until I change this answer, seeing 670, they would have got heart attack. You know, sir, 6070 is put in ad. Sorry, ma. I'm asking sorry to recorded people. In future, whoever is going to see my video. Man is like, Rombo over, sir. Now, tell me the cash generated from operation. From 21 lakh, you came 7,60,000. Oh my God. 21 lakhs. From there, where you come to? 7 lakh? 60,000. Oh. Very bad performance. Next. Segment 4. Tax paid. Nothing is there. Provision for tax is there or not there? No tax. Nothing. Balle. So this becomes my cash flow from operating activity. Cash flow from operating activity. A. Next is what? Cash flow from investing activity. Let me see the working note 1 and 2. If there is anything informative. So plant and machinery purchase for 13,40,000. Purchase of plant and machinery. 13,40,000 in brackets. So many in brackets. Okay. PFD, nothing is there. Trade receivables, nothing. PDD, nothing. Okay, coming from beginning. Share capital nothing, reserve surplus nothing, long term borrowing nothing, short term borrowing nothing, trade payable nothing, current liability nothing. PP over current investment from 1180 to 15 lakh. How much?
3,20,000.
3 lakh 20,000. Purchase of investment. 3 lakh 20,000. Okay, that's all. No other investing activity. 16 lakh cash used in investing activity. B. Okay. C. Cash flow from financing activity. Come from beginning. Capital, nothing. Reserves and surplus, nothing. Long-term borrowing from 0 to 9 lakh.
Proceeds from issue of
Proceeds from issue of debenture. How much? 9 lakh. Add or minus? Add. Cash inflow. Short-term borrowing from 150 became 3 lakh. Short-term borrowing is what? Bank loan, is it? Yengama kuduthirukka bank loan. That's itself. Oh, wonderful. Proceeds from bank loan. How much? 150. Okay. Paid payable, leave it. Other current liability, what is that? Dividend payable. Dividend payable. Oh my God. Open the dividend payable ledger. Opened or yet to open? Yet to open. Working note number? Dividend payable ledger. Opening balance. Total how much? 1 lakh? 50,000. Anywhere current year dividend? Not given, because if you look at the difference of the surplus, look at the difference of the surplus, 1040 exactly matching with the profit before tax. If it was not matching, then there's a difference. Then that difference could be because of provision for tax or even dividend. So if there is no difference, that is profit before tax and retained earnings surplus, both are same. So there is no dividend of current year. So current year proposed dividend is 0. So P and L is 0. Closing balance is 0. Closing balance is 0. Correct? Which means entire 150 is paid to bank. 150. My question goes to all of you.
Previous year's dividend.
This dividend is of which year profit? Previous to previous year profit. Approved in which year? Previous year. Actually supposed to be paid in previous year. But we didn't pay in previous year, we paid in current year. This 0 is what? Which year dividend? Previous year dividend. To be approved in current year and to be paid in current year only. Donkey fellow. Within 30 days you pay, no? I knew you'll make mistake. Within 30 days you have to pay. If you don't pay, then you pay next year. Next year, Amma. Who is spoiling which person? Sumanyo. No, I'm telling Piyush, don't spoil Sumanyo. Dividend paid, how much? 1,50,000. That's all? In bracket. That's all. Nothing else. For this question, sir, next class, sir. Jujubi question this is. How much it is?
9 lakh.
Cash flow from financing activities, point C. Net is increase or decrease? Zero. Wow. For this so much effort. Net increase in cash and cash equivalent, 0. You had decrease also, right? 0. Then add opening balance of cash and cash equivalent.
15 lakh, 15 lakh.
Opening so much cash is there, Dubbu party. How much? 15, 20. Closing balance of cash and cash equivalent. How much? Same 1520. Sir, there is no movement in cash and cash equivalent, sir. Cash flow statement not required to be prepared, sir. So if the same question comes in exam, write this and come. Cash and cash equivalent, no movement. No movement is why cash flow statement. The person will say this 10-mark question. I'll remove this one. Target almost 80% achieved. If you permit one more question, full target achieved for today. Scanner question one. What, sir? More. Last time also you said, sir, I did one question. No. No.
Sir, somebody is saying yes, sir. I said homework, sir.
You stay back with me and do.
நீங்க டிராப் பண்றீங்களா ஓகே சார்
இங்க பரலோகத்துக்கா
இல்ல சார்
This question my target missed out today. No problem. Because of Suman, is it? Today is what Tuesday. Next class is Thursday, no? 5 to 8:30 again. Okay. This PDF I'll upload. Question 4 homework. Take question 4 homework. I'll go home. How many more questions homework I'll tell you. Question 4 homework. One second. Chalo, let's wind up people. That's all from my side for this session. I'll see you all in the next class, which is Thursday, 5 p.m. sharp. Until then, bye-bye. See you. Take care. Those discussion is there. Officially, I'm signing off the recording. Recording people, bye. Online people, please stay back. Bye.